Remember, I will continue to buy, but don't buy just because we're buying. That's very low. The point is, you're trying to get a range of possibilities. Alibaba kills it here. That's a good thing. Alibaba stock has been down a lot lately, and we're here to evaluate it. Alibaba hit a low of $58 a share, and then recently went to a high of $120 or so back in January. I got completely blasted on options back here. I had covered calls on BABA. I lost $72,000 on this covered call. Now, luckily, I still made money in the month because I had plenty of other options that offset it. But I look at this saying, when it was this high, people were like, BABA's back, baby. It's double off its low. Well, what's it done since? For a value investor, that's a good thing. So what we're here to do is evaluate BABA. So Mo, what would you say the biggest concerns for BABA would be?
So a couple of bear cases here. Gross profit margin has decreased from 57% in 2018 to 36.8% in 2022. Net income margins from 25.6 in 2018 to 3.4 in 2022. That's big.
Yeah.
But
yeah.
What did we go through during those times?
Yeah, and the other thing is, this is so absurdly low for profit margin. I don't even think about that.
Yeah.
Gross margin, 58. Okay, that's pretty awesome versus 36, but 36 ain't bad either. Remember, this is considered the Amazon of China. Do you know what Amazon's gross profit margin is? 13.5% in the last 12 months.
And also,
almost triple
with this
for BABA.
With these spin-offs and splits that they're going to do with their company, breaking it into 6 different groups, that's going to help that.
Yeah.
Should help that, wouldn't you think?
Yeah. Now, what's the other? Communist China.
Yeah, Communist China.
And what did Charlie Munger say this weekend at the Berkshire Hathaway meeting?
What did he say about it?
He said, both sides are being stupid.
Oh, both sides are being stupid, that's
and
right.
It's with...
There needs to be a happy ground that they need to find.
And it's in both sides' best interest to find happy ground. Guys, U.S., you have to realize China's going to be a force to be reckoned with for a long time. Yeah. Just like Mexico's on our southern border. Let's have a good relationship with all these countries. This is absolutely ridiculous. Now, China, what are you doing with the whole Taiwan thing? And U.S., what are you doing intervening with that Taiwan thing? Now, if something happens there, BABA stock will likely plummet. Mm-hmm. Are you in this for the long haul?
If it plummeted for me and that was it, I think I would probably be buying more.
That's the hard part.
Because
but I think China will be a bigger economic powerhouse as time goes on, and Alibaba will be a big recipient of that growth.
They've been a leader to this point. Why would they not be a leader in the future? They're not done with their leading position, I don't think. I
agree. So let's look at some metrics for Alibaba.
Okay.
$216 billion market cap, which is down significantly from its high. And look at this, Mo. Enterprise value of $237. This difference is essentially the net debt. So pretty low. This is good. Their net debt is pretty low. Now, their 5-year return on invested capital is 5.6%. That's very low. But I think it's skewed by all the things they've been doing lately, and the drop in gross margin, the drop in net income and profit margin. I think it's been skewed. I don't think that's a permanent thing.
Yeah, I mean, they really went with the COVID zero policy for quite some time. And the nice thing is it didn't only affect this company. If you look at any of the Chinese companies, they're all in the same boat.
And let's show you the proof that this is a temporary issue. The income statement. Let's look at the annual income statement. In the last 12 months, BABA showed $9 billion in profit, drop from 21.77. Let's look at their cash flow in the last 12. You have to go to annual for our software, by the way. Let's go to annual for the software for Chinese companies. $13 billion in free cash flow, down from 27. So they're still showing more free cash flow than income. And I like that a lot more. So there's a lot of benefit there for the company. Let's look at their 8 pillars. All right, some crappy stuff here. Net income's down. Shares outstanding is slightly up, not worried about that. That is lower. Okay, but look at their multiples. 15 times PE, 11 times price to free cash flow over the last 5 years for both. Cash flow is up even though net income is down. This makes me happy. Doesn't it, Mo?
Yeah, and as far as the shares go, they have a purchase program of $25 billion through 2025.
Which is over 10% of their market cap.
Right.
Now let's look at Analyst. Now guys, if you have our software, look at this. Look at the earnings growth per share. Does this look like a company that's dying anytime soon? Assuming you believe the analyst. And I do believe that analysts have a bias in there. But let's take 1380 times 15. It's a $200 stock right there. Right there, just from that. Okay, let's look at their revenue growth according to analysts.
Pretty solid.
Pretty solid. High single, basically double digits, 10% a year. All right. So we're looking at these things thinking to ourselves, all right, There's a lot of bad stories about Alibaba in China. It hit a high of what, 310 a share. Now it's at 88. I started buying at, I don't remember when I started buying, but my basis is essentially like now 135, 140.
And it hit a low of $58.01.
Yeah. And I'm down a lot on my Baba investment. Guess what? Don't care. Actually, my basis has got to be lower than that now because I'm not showing that big of a loss on my Alibaba.
I don't know.
Either way, I'm happy with where I'm at. And as the shares go lower, I will continue to buy, but don't buy just because we're buying. That's not the way to do it. You need to do your own investment. We're trying to teach a process here. And your job is to take our software and apply your own process to it. Just like we get advice from our value investor friends, but we don't follow them directly. We have our own process. Mm-hmm. Even between Mo, Dalton, and I, we have very different approaches to investing. Mm-hmm. Very different. And sometimes we agree and sometimes we don't agree. And that's just the way it is. So I'm going to do a 20-year analysis. Now, guys, this stock analyzer tool was our most popular part of our application last year. 1.3 million uses last year. If you like the software, if you like all these tools above that are going to be there we haven't even talked about, and the community here of 1,000 investors, every single one of these in and of themselves is worth how much money per month? And for a little over $1 a day, you can have this. Go to everythingmoney.com, sign up. We're running a special, $7 for 7 days, so you can try the software, fall in love with it, and then keep using it. Guys, you're crazy if you don't do this. The price goes up every month. Sign up now because you're locked in at that price. Do it. $1 per day, everythingmoney.com. Mo is going to do a 10-year analysis. I'm going to do a 20-year analysis on Baba. So just hang tight for 1 second. All right, so we've both done our analysis. Now remember, guys, we've done this video a lot in the past on Alibaba, and our numbers change. However, overall, the idea is the same. So again, I did a 20-year analysis, but you can do 1 to 20, and Mo did 10 years. So Mo, for your 10-year growth rates on revenue, what'd you choose?
I did 3, 7, and 11.
Okay, I did 5, 9, and 13. Oh. All right, profit margin.
I did 16, 21, and 26.
Okay, I did 15, 19, and 23.
Okay.
Free cash flow margin.
18, 23, and 28.
17, 22, and 27. Yep. Now remember, guys, if you look at this, we want to explain this. I'm looking at history and kind of driving, okay, 3.8% affects this one, 15% the last 5 years. So let me do a low. Let's say this last 5 years is the new normal, 15. And it's all about, this is the art of investing. There's no right or wrong way to do it, but it's about sitting there and saying, what's the potential for Alibaba? Like if this is a company like HPQ, I'm not putting in 5, 9, and 13. No. Because HPQ is not growing that much, right? Hewlett Packard. So PE.
I did 16, 18, and 20.
I thought about doing that. I'd still stuck with 15, 16 and a half, and 18. And same with my price to free cash flow.
Yeah, I did the same numbers with price to free cash flow. And my returns were 10, 12, and 14%.
Same with mine.
Okay.
Now, guys, remember, we put these numbers in. And the people who use this software, when they join the community, one of the first questions I see is, guys, how do you put these numbers in? And everybody's comment is like, listen, you got to do some sort of, and people will share. They'll take a screenshot. Look what I did. If I ask 1,000 people in our community to do Alibaba, you know how many different variations of this I'm going to get? Hell, you know how many variations of this I'm going to get? Lots of them. But at the end of the day, whether your price ends up being 100 or 110 or 120, or the point is you're trying to get a range of possibilities. And if Alibaba kills it here, I want a higher margin of safety. That's why I put a 14% return in.
Yep.
So Mo, what were your values you got?
So on the low end, I got about 118 to 133. On the high end, 300 to 320. And in the middle, call it about $200.
Look at mine. A low side of 130 to 150, a high side of 360 to 430, wow. Middle side of 220 to 250. Now guys, these are very different from the past, but I also looked at it from 20 years, changed these numbers. The bottom line is, to me, Alibaba is undervalued and I'm comfortable with the risk of China. You should not do it just because of me, though. You will end up making more mistakes down the road. Find your process. Join our software, $7 for 7 days. You'll find your process, and it'll work great for you. Thank you for your time.